Hello everyone. In the previous lesson, we stopped at a very important question. We know that trading the Nasdaq contract is very, very expensive and risky. We already gave in the previous example in the last lesson that even a small movement, even just a difference of 70 points could potentially cost us hundreds of dollars. And as beginner traders, do we have an option that is more affordable than immediately risking hundreds or even thousands of dollars, right? So my answer is definitely yes. And actually, this problem is a global issue. The futures exchange understands that futures contracts are a very expensive product, and only large entities like institutional bodies and hedge funds and wealthy individuals can trade with futures contracts. And as a result, they developed specifically for us, the regular traders, smaller futures contracts, which are also known as micro contracts. So let me briefly explain. Now show you two types of contracts. A mini contract, these are the large contracts. For example, NQ, which is a futures contract on the Nasdaq. And also, for example, ES, which is a futures contract on the S&P 500. And also, for example, CL, which is standardized futures contract on oil. And also GC, which is a futures contract on gold. These are mini contracts. That means these are the regular contracts. Let's call them the large and expensive contracts. And on the other hand, we have the micro contracts. The dollar value of a micro contract is much smaller than the actual dollar value of the mini contracts. For example, for NQ, there is a micro contract called MNQ, micro NQ. And for ES, which is a futures contract on the Standard & Poor's 500 index, there is a micro contract called MS, or in other words, micro ES. And it's the same for oil. CL also currently has a micro contract available for trading. It's called MCL. And of course, gold also has a micro contract, often simply called MGC. Now, what's the difference in terms of market value between the NQ and the MNQ? What exactly is the difference? So let's find out. As you know, if we want to find information about futures contracts, we need to go to the Futures Exchange website. So let's go to the Futures Exchange website. And let's search here for the micro futures contract, specifically the MNQ. We'll click on the first result. Click here to see its details, please. And you can see that this contract is leveraged only 2 times. That means it's actually worth significantly less by a factor of 10 compared to the NQ contract. In other words, the MNQ is only worth 1/10 as much as the NQ contract overall. And why is that? Because as you can clearly see for yourself on the official Futures Exchange website, the value of the MNQ contract is only 2 times, and we know that the value of the NQ is about 20 occurrences. Let's actually see this. You can see that right now I'm on the NQ contract, which is the large contract. And you can see that here it's written that its value is 20 times. And the value of the small contract, the MNQ, the micro, is only approximately 2 times. Also, please note that the value of a single tick is actually only half of a dollar. And if you remember, the value of a tick on the NQ contract is $5. That means that the value of the tick is exactly 1/10 of the value of the NQ. That means that 1 point here will cost us only $2. We know that in the NQ contract, the value of 1 point is $20, which means that in the MNQ specifically, the value of 1 point will be $2. Now you're probably asking yourselves if there's any difference in the charts. So the answer is no, and I'll show you that right now. Let's add another chart. Let's add below the chart of the MNQ, which is the micro Nasdaq. You can find it in the list of the micros under the name, which is MNQ. Let's add it. And you can clearly see that they just look exactly the same. They're really honestly identical. Notice that here the contract is MNQ and here the contract is NQ. And you can see that they look exactly the same. And as beginner traders, we would want to trade with the MNQ. That means if a move like this, for instance, occurs, could cost us $1,000, then here a move like that could really cost you us only $100. Now let's just check how much money we actually need to have in our trading account in order to trade the MNQ. To check that, we'll go ahead and see to the NinjaTrader website and go back to our table, look for the name MNQ. You can actually see that it's right here. And you can see that in order to have the ability to trade the MNQ, for instance, we need $100 in the trading account. That means if you now transfer $100 to your trading account, you currently have the authorization to buy at this moment and sell MNQ. Amazing. So I hope that now you're a bit more relaxed and you see that it's possible to start with small steps. Of course, at the beginning, we'll want to trade only with micro contracts. As you may have noticed, you can see that each of the contracts also has a micro version. For the S&P 500, for Ethereum, for gold, and for all sorts of other financial products, you can see that here we have a list of regular futures contracts, which are called sexual contracts, which are the more expensive contracts that we are referring to. And here we have the list. Micro contracts, which are the cheapest contracts, more. Thank you very much, and we will continue the lesson. Come bye-bye, okay?